How much is your insurance company going to pay you if your car is damaged in an accident? Hi, I'm Andrew Irvin. I'm a personal injury attorney in Winter Park, Florida, and I help people who were injured because of somebody else's carelessness. There are key clauses in your insurance policy that dictate how much an insurance company must pay you if your car is totaled or it needs to be repaired after an accident. These clauses are within the comprehensive and collision coverage section of your policy. And within this section, the insurance company promises to pay you the actual cash value of your totaled vehicle or the cost of repair your vehicle. However, all insurance policies limit the amount your insurance company has to pay you. And this part is probably titled the limit of liability. One of the common limits is the actual cash value of your vehicle. Your policy gives the insurance company the power to determine whether to pay you the actual cash value, the cost of repairs, or another option. And they're going to select whichever one is less. If they're paying you the actual cash value, that is what's commonly referred to as totaling your vehicle. And usually it's because the repair cost of the vehicle exceeds the amount that your vehicle is worth. Now, you likely will not have a choice on whether your car will be totaled or deemed repairable by your insurance company. If the insurance company determines your vehicle is totaled, they should be paying you the actual cash value, unless there's some different agreement in your policy. But most policies I've seen require the insurance company to pay this amount. So what is the actual cash value? It may or may not be a defined term in your policy, but most courts in Florida have determined it means the replacement cost minus depreciation. Replacement cost is exactly what it sounds like. What would it cost you to go out and buy that same vehicle? Now, if you've had a total loss claim before, you probably thought, I didn't get enough money for my total loss. And you're likely correct, because in order to satisfy their obligation to pay you the actual cash value, the insurance company needed to pay you the replacement cost. They should have paid you enough so that you could have bought a similar car if you wanted to. And unfortunately, this rarely seems to be the case. A lot of insurance companies use third-party software to determine what they're going to pay you in the event of a total loss. The softwares the insurance companies use do look for comparable vehicles, but they make so many adjustments to those comparables that they no longer represent what the actual cash value of your vehicle is. Let's say you're driving a 2020 Ford Explorer with 60,000 miles. Your insurance company should pay you enough to go buy a similar Ford Explorer with a similar mileage on it. If you want more tips for negotiating your total loss claim, check out our video, What to Do When Your Car is Totaled, for more information. But for now, my goal is for you to know that your policy likely requires your insurance company to pay you the actual cash value of your vehicle. And that is a clause that's there to protect you. And unfortunately, a clause I think most insurance companies violate. Another common limit of liability is the cost of repair. So who determines what the cost to repair your vehicle is? Is it you, your collision repair shop, your insurance company, or someone else? Well, that depends on your policy. Some insurance policies go to great length to dictate how they will determine the cost of repair your vehicle. And in doing so, they attempt to further limit what they're going to pay you in your repair claim, even if it's not the actual cost to repair your vehicle. Your insurance policy may say that the cost of repair will include aftermarket parts or junkyard parts, even if your vehicle didn't have these parts prior to the accident. An insurance company may also say they only pay the competitive price or the prevailing competitive price in the market area. Prevailing competitive price means different things under different insurance policies, but in general, what the insurance company is attempting to do is to dictate the amount it should cost to fix your vehicle. However, many insurance companies don't work very hard to find out what the prevailing competitive price is in your area. Many of them use out-of-date data or no data at all. It would be like you going to your collision repair shop and telling them you would like to pay them the rates that they charged in 1999. And as I mentioned, many policies affirmatively state that the insurance company's estimate will include aftermarket parts or junkyard parts. However, those parts are required by law to still be of like kind and quality. Florida specifically has a law that requires aftermarket or junkyard parts to be of like kind and quality. And if you want to look that up, it's Florida Statute 626 9743, subsection 4. If you cannot reach an agreement with your insurance company on what the cost of repair is, check your policy to see if there's an appraisal clause. This may be a good option for you. And if you need more information on how an appraisal clause works, check out our video. And whether you're in a claim or shopping for insurance, make sure you're aware of what's in your policy so that you can understand what the insurance company is required to pay you with your property damage claim. I'm Andrew Irvin, managing partner of Irvin & Irvin. And if you know somebody that's been in a car accident or shopping for insurance, make sure you share this helpful content with them.